Hey guys, hope we are good. Just wanted to come and jump on, do a quick live Mortgage Rates UK. What is happening with mortgage rates at the moment if you are putting a 5%, a 10% or a 15% deposit down? So what I'm going to do, I'm going to jump on the screen, go into my mortgage sourcing software, and let's have a little look. We're going to look at fixed rates and variable rates, and over 2 years, 3 years, 5 years, have a little look what's going on, see who's got the best deals, and go from there. So let's have a little look. Let's go here. Okay, so £200,000 purchase price, 190,000 loan amount. This is a 95% loan to value deal. Source of deposit, savings, and the loan term 30 years. So let's have a little look for mortgage products here. So we're going to look at 2 years first, okay? Right, so we've got some figures coming on the screen here, 3.49%, 4.3%. So these are discounted rates. What a discounted rate is a discount from the lender's standard variable rate, or sometimes known as the revert rate, which once your 2 years expires, you then revert to the lender's standard variable rate of interest. So 4.54, so start at 3.49. As you scroll down here, we've got some more discounts, 4.79. If we look along this column, because we're talking mortgage rates, it's important that we let you know what the annual percentage rate is as well. So this is this column here, so 6.98, 6.9, 7.3, you can see them here. What that stands for is annual percentage rate calculations. That takes into account all of the fees that you are paying as well as the rate, and then calculates it as an overall rate over the whole year. So let's have a little look, scroll down. 2 year fixed rate nationwide here, 5.54% with a 7.4% annual percentage rate. ERC, that stands for early repayment charges. So after the 2 years, there's no early repayment charges, and a £500 cashback. So at the 2 year range, you normally find that the fixed rates are actually higher than a 3 or a 5 year fixed rate, because lenders don't really want you to go for a 2 year fixed rate at the moment. So let's keep having a little look here. As you can see down this aisle here, that's the initial period, and there's no what I call overhang. So ERC 2 years, initial period 2 years. If this said 2 years and the ERC said 3 years, that means there would be a 1 year overhang. You want to avoid this type of mortgage product, in my opinion, with overhangs. Okay, so let's have a little look at 3 year deals. Okay, we've got all the products turned on here. Apply filters. And let's have a little look. Okay, so Skipton Building Society, 5.3%. You can see that that's come down a little bit from Nationwide's 2 year fixed rate. No cashback. And the annual percentage rate calculation, 6.3%. We have got Coventry Building Society, 5.76%, with a cashback of £500. Which is not bad at all. Early repayment charges are for the 3 years, 5.6% on the annual percentage there. That is because of the £500 cashback there. 5.8 Skipton, Coventry, and then we're back to Nationwide, 5.54 with a 7.3, £500 cashback, 7.3 annual percentage rate. So yeah, I mean, Skipton and Coventry are looking good on the rates, but just because they've got the lowest rates doesn't necessarily mean they are the best deals on the market. You've got to take all the fees into account as well. A lower rate with a fee which is, twice as high as the next best rate, which is a tiny little bit higher, which has no fees, or the one with the higher rate and no fees could be a better deal. So it's not always about that. When I'm sourcing mortgages for my clients, I would use a different sort of way of setting it up. It would take all the fees into account, and we would look at that. It's called total cost, which would take the rate, all the fees into account, and then show you how much you're going to pay. Let's say you're going for a 5-year fixed rate. It would show you how much you pay out in total over the 5 years, including the fees. So just take that into consideration. Okay, so let's have a little look at the 5 years, which I think is where the best products are the lowest rates. This is at 95% loan to value, remember. So a 5% deposit. So you can see, look, nationwide 4.99 here. Okay, let's just change that about a little bit. Look at the discounts as well. 5-year discount 4.39. Tipton and Cosley Building Society. This little marker here means you can only get this product through like a broker or a packager. 4.75, 5-year fixed rate. I mean, that is pretty good for a 5% deposit. Wow, under 5% with a 5% deposit. That's fantastic. 4.75. That's with Skipton there. Again, the annual percentage rates you can see here are coming down. 5.9%. Yorkshire Building Society 4.78% rate, 5.97 on the annual percentage rate, with a 250 cashback. And then we've got Nationwide, which are they're quite prominent near to the top at the moment, quite a lot of the time. 4.99% 5-year fixed, £500 cashback, 6.8% annual percentage rate. So not a bad little deal there. Obviously the discount deals are related to the lender's variable rate of interest. So, you know, if the Bank of England base rate goes up, then the lender will likely put their variable rate up as well, meaning if you're on a discounted rate, your rate goes up too. As you can see, they are a little bit lower than the fixed rates, but, you know, it's more of a gamble, of course, going for a variable rate, which a discount is, which means it can go up and down there. So let's come back to our filters here. Actually, no, we're going to look at the 10% products now, with a 10% deposit, should I say. So 180,000, 90% loan to value. Let's have a little look there. See what rates we've got coming up. Okay, so Tipton and Cosley Building Society seems like they're the ones with the best variable rates at the moment on the discounts. No trackers there. The discounts will track the lender's standard variable rate. A tracker will track the Bank of England base rate. Okay, so Yorkshire Building Society. This little arrow means it's a direct product only. 4.5% fixed. 5 years. We can see that's a little bit lower than the best one on the 5% deposit, which I believe, or from memory, was 4.75%. So we got 5.86 on the annual percentage rate there. Skipton, they seem to be quite up there at the moment with rates. I have seen that lately. 5-year fixed rate 4.53%, 5.8% on the APR. NatWest, Leeds Building Society, Virgin, all very similar rates here, quite competitive. And there's Nationwide throwing in a £500 cashback there with a 4.59 5-year fixed rate. And if we go down a little bit, I can see Santander, they're coming in as well. I do quite like Santander as a mortgage lender. Sometimes they will ignore if you've got any unsecured debts, as long as they're not too high. They won't deduct them from your income. So sometimes if you can't borrow enough because debts are reducing the amount you can borrow, have a little calculation with Santander on their affordability calculator. Sometimes it will not take into account you've got some debts, which is really handy sometimes. Okay, so what do we got now? So that was on the 5-year. So let's have a little look on the 3-year in regards to a 10% deposit. Okay, filters and apply, and then we will look at with a 15% deposit, and then that will wrap it up. Just wanted to have this quick mortgage rates update. Okay, so let's just source by the discounts first. Tipton and Cosley, again, their discounted product, Mansfield, with a £400 cashback, 4.19% discount with a 6.5% annual percentage rate. Mansfield Building Society, 5.69% with a 7.6% annual percentage rate, £400 cashback. Again, these little squares, you can only get these type of products through packages. We are packages, by the way. Okay, just thought I'd chuck that little one in there. Mansfield Building Society discount, 5.69%, 7.6 on the annual percentage rate, 400 cashback. And then we're looking at, I've just clicked the button. Let me just go back there. That was Coventry Building Society on the 5-year fixed. 5.4. Well, I keep clicking it. Why do I keep doing that? Okay, third time lucky. Let's go get those rates back. Here we go. 4.9. 4.9. But I mean that's not great, is it? On a 3-year fixed rate with a 10% deposit, you can see that the 5 years are still winning, aren't they? 4.9, 5.4 on the APR, which is pretty good. So must have lower fees. Coventry, Nationwide, Accord Mortgages, one of my favourite lenders for first-time buyers. Yorkshire. So there's a few familiar lenders at the moment for first-time buyers here. You can see the pattern. Principality, they've just come in there. Okay, so let's have a little look at the 2-year deals, which will probably be the highest. Okay, where years gone by, 2 years have always been the lowest rates. Okay, so 3.49, Progressive Building Society, 6.98%. I mean, that's a high annual percentage rate considering the starting point's 3.49. Must have some high fees in there. Okay, Newcastle Building Society, Progressive Building Society. So you can see it's these sort of smaller building societies that like providing these discounted rates. All right, there we've got our annual percentage rates, all with 2-year tie-ins. We've got one here. You see this? So there's a blank box on the ERC, the early repayment charge. That means there's no tie-ins at all on that one. So it's not a bad little deal, 4.69%. Okay, so give you an example, why someone may go for that. Obviously, it's important to know every person's first-time buyer's situation's unique, and just because one product's okay for this one doesn't mean it's going to be right for everyone else. And I can't provide the best mortgage products for you individually, because I would have to do what's called a fact find and then recommend a mortgage product to you. But generally speaking, to give you an example, if your situation was you wanted to buy a property which was run down and do the property up and sell it within 3 to 6 months, a really short time, you might go for a discounted rate and take the gamble that rates could go up. But because you're only going to be there short term, you can do the property up, sell it after 3-6 months, and then pay the mortgage off, and you've got no penalty. And then you can use that equity and buy your next property, which some people do. Okay, so let's go back and look at the 15% deposits, shall we? Okay, so 190, 180. 10% is 20k, so 15% will be a 30k, so that's 170. 85%, 15% deposit. Let's have a little look. Okay. There we go. Starting with the 2-year products, 4.54%. All right, 7.3 on the APR. Scottish Building Society, we've got Newcastle, Progressive. Okay, 4.09. That should be at the top. There we go. Right, I've got it the right way now. Starting at 3.49 as we scroll down. Nationwide, no tie-ins. Not a bad little deal there. 4.4%, 4.44% tracker. So it tracks the Bank of England base rate for 2 years. And you've got no tie-ins at 7.2% on the annual percentage rate. You can pay that mortgage off whenever you like with no penalty. 4.44 with Nationwide, Barclays 4.46, all of the same annual percentage rate. Let's see what's going on with the fixed rates. Okay, the best one we've got coming in here is Virgin Money, 4.59%, 7.3% APR, no cash back. So you can see whatever we do really, on the fixed rates, you're looking between 4 and 5%, no matter what deposit you're putting down. The gap in rates has closed, no matter what deposit you are putting down. But normally when you put a higher deposit, you know, it should make a bigger difference in rates, but it's not in this market. 4.69. So we're in and around sort of just over the 4.5 to 4.75 with the best 2-year fixed rates on the market with your 15% deposit. So let's have a look at the 3-year and then the 5-year. All right, imagine 3-year might be a little bit better, and then again the 5-year, of course, is going to be the best. So 3 years. Okay, 4.19, Tipton and Cosley. All right, that is a mortgage broker deal there. Can't get that one direct, otherwise it would have an arrow. All right, 4.19%, 6.5 on the APR. Tied in for the 38 months. Let's have a little scroll down. Mansfield Building Society. Mansfield Building Society. Now we're getting into the fixed rates here. Okay, 5.41% with a 15% deposit for a 3-year fixed. I mean, that is high, isn't it? £500 cash back. Okay, so let's have a little look at the 5 years, and then we can have a little chat about these mortgage products and, you know, what the market's thinking, and talk about my clients and the products they're considering. Okay, so let's start at, okay, so the fixed rates are lower than the variable rates. The discounts on this one, 4.28, so we're getting near the 4% mark. This is with a 15% deposit and fixing for 5 years. I have got a few lenders lowering rates as of tomorrow. I did see a 3.99 Virgin were offering not too long ago. They've obviously, sometimes mortgage lenders will just lower their rates on the market, so they can gain market share. They don't necessarily make profit, and then they try and sell other products to you. So that's what happens if all of the out of the blue a lender drops below the whole market, which is what we want, competition. Okay, so 4.28 with Virgin, 4.34 with Santander, both on 6.3 annual percentage rates. All right, and then we go down the list. NatWest, they're normally up there. Tipton and Cosley, Nationwide, £500 cashback. Do like NatWest and Nationwide because they can sometimes give enhanced income multiples, more than the standard 4.5. Virgin as well. That is only if you're putting a 10% deposit down. Most lenders, all lenders apart from Nationwide, will cap at 4.5 times income unless you're putting a 10% deposit down. Okay, let's have a little look at the next page, see what's going on. Nationwide all over the place, Virgin, NatWest. And as we go, the rates start increasing. Virgin, £1,000 cashback there, 4.42%. So you may want your cashback to pay your solicitor's fees or something like that. Sometimes people prefer that. There we go. So let's bring that to a close. Let's close all this down. Go back to there we go. That's the one I meant to click. Okay, so there we go. Rates are anywhere between 3.5% if you are looking at a discounted rate, all the way up to near the 5% mark if you're going on, a fixed rate, a 2-year fixed rate. Hello, Terence, Raja. Buy-to-let deals? No, unfortunately, we are not buy-to-let. Just first-time buyers is what the channel specialises in. So apologies for that, Raja. Hi, Denise, and yeah, hello. So hi, Alex. First, want to say that love your content. Thank you very much. I have a question for you. Where's the best place to find foreclosure properties to invest in? We just deal with first-time buyers. I'm not really into investment properties myself. So foreclosure properties, yeah, I would have no idea on that. Do you foresee a big reason for homeowners selling is due to them not being able to afford to pay for their own home? Interesting question, because obviously the cost of living is increasing, inflation has been increasing. Okay, I see more properties coming on the market, and the reason is because when property values start going down, people want to sell. They understand that, okay, we're at the peak now, and if we don't sell sooner or later, our property is going to lose value. So that is probably a reason which is right up there. And also, yeah, I mean, if your electric bill is trebling or quadrupling or, something like that, then, it could become unaffordable and you may need to downsize or you may need to do something. So, yes, I do think that will come into account as well, but I don't think that will be the main reason. I think what you see is when property prices start coming down, you'll see a flurry of properties coming onto the market. Sometimes landlords will sell their properties at this point and then wait for the market to hit its bottom. Sounds a bit strange. Go a lot lower, and then they will reinvest that money into buying properties again. So that is another reason. And obviously people want to move. If rates are going up and properties are coming down, they don't want to make their next move when rates have gone up a lot more and property prices have come down even further. So that's why you see this flurry of properties on the market. So there we go. I hope that this gave you an idea of what's going on with the mortgage rates at the moment. There's a couple more questions there, but I'm just gonna wrap up very shortly. I do need to let you know as well that now we've had a look at mortgage rates. As a mortgage is secured against your home it could be repossessed if you do not keep up the mortgage repayments. So need to let you know, mortgage warning there. So Denise, I'm planning to get my first property this summer. I have a 70k deposit and am planning to buy a 240k house anywhere near London. Do you think it's doable and not too crazy in this crisis? So 70k into 240 is a 29% deposit. It's a very healthy deposit there. In terms of, as long as your affordability is okay and you can borrow the amount you're looking to borrow with that deposit, and as long as you've got a good credit score, you know, 99.9% of mortgage lenders are going to lend to you. In regards to buying near London, 240 within London is going to be a challenge. Is it a house? Yes, it is a house. On the outskirts, East London is a little bit cheaper, sort of East London, Essex border. I think that's possibly where you might find something for that sort of price. If not, you're going to have to go more into Essex or more on the outskirts there. In regards to rates, where are rates going? Most are saying this is normal and they may increase as times go on. Your thoughts? I think that we may be in for another increase, possibly 0.5%. This is my thoughts process. So over the next couple of years, obviously the Bank of England base rate have already put their rates up quite a lot. And the main increases have been done for now because we want to see what effect that will have on inflation. The reason they are going up is to try and bring inflation down. That apparently will take anywhere between 18 months to 2 years, but they're all predictions. The market is quite unpredictable. We've got lots going on around the world and within the economy. So I personally think it's a difficult one to sort of to give, you know, a really detailed response. But I think we could be in for a little bit more of an increase on that. Is it worth me waiting until the new tax year so I can squeeze a little more out of the government for my lifetime ISA? Yeah, okay, so Joshua, I always, no matter whatever question comes to me which starts, should I wait? Should I wait to see if house prices come down more, if rates come down? I'm never a fan of waiting, because what is applicable now in a week's time could be totally different. Rates could double. Something else could happen, which means your situation is going to be much more difficult to obtain a mortgage. There's so many different things that could happen which would have a negative impact on your situation. If you can buy a property now and get onto the ladder, I don't think there's any point in scrimping for a few pennies when a mortgage is over 25-30 years. Normally your property that you buy now, 25-30 years later, it should be at least worth double. So I've seen people wait and then not be able to get back on the property ladder for another 10 years. So take that one into account. Off topic, what's the difference between share of freehold and freehold? Typically I'm finding this when looking. Yeah, I mean, I want to keep this to a mortgage rate sort of discussion. I'm going to be doing more lives and keeping it quite streamlined, but a freehold is normally when you buy a house, and a share of freehold is different to leasehold. A leasehold, you have a managing agent. With a share of freehold, you are basically the managing agent. So if there's 4 flats, you all own a share of the freehold, 25% each. You would then be responsible to pay money into your own pot to pay for maintenance, repairs of that property and things like that, for example, rather than a managing agent dictating which way you go there. So it can sometimes be beneficial in that you're not dictated by a managing agent, but be careful with the mortgage lenders, because not all mortgage lenders will lend on share of freehold. Lending system is corrupt. Pot Noogle, thanks for that. Denise, thanks for your answer. No problem. Okay. Get in touch, please. Okay, so I'm going to wrap up on this last question. Gabrielle Eubank. Okay, I have a 25k deposit. Is it realistic to be able to buy a flat in Luton area for around 150k? I am buying on my own. So yeah, it's a good deposit there. Okay, so in the Luton area, 150k. Yeah, I mean, you're probably going to get a one bed. You might get a one bed for that, I reckon. So yeah, if you're buying on your own, a one bed, maybe might find the odd two bed around. So yeah, I think 150 is okay. I mean, it might be a little bit short, but then house prices, property prices, should I say, have come down a little bit. So yeah, jump on Rightmove, have a little look there and see what's going on. Yeah, I say yeah, and that's your username as well. Yeah, Top Black, thank you, no problem. All right, guys, so thanks very much for joining in here. I'm going away next week for a week, so there won't be a video next week. I'm going to Centre Parks for the week, so it should be good. And when I get back, we are going to be doing podcasts, which I'm just sorting out in the background, and we're going to be doing many, many more of these live sessions. Been meaning to do it for a long time, but you know, things got in the way, which they are no longer in the way. So thank you very much, everyone. And if anyone wants to get in touch and have a free, no obligation chat, if you've got a 5% deposit, okay, and you know, you want to go through your options, we have an onboarding process which takes you through your options, does an affordability calculation with all the mortgage lenders out there, so you know what you can borrow, what your maximums are. We check all your documents. We provide you a recommendation, which is a mortgage quote, and an agreement in principle, so you can go out and look for properties. Or if you want to do it on your own, you don't want to book in with us, then we've got a online course, a mentorship program called First Time Buyer Expert. Okay, just go to firsttimebuyerexpert.co.uk. I will be mentoring you through the program, and you can also access software very similar to what we were using at the start of this stream, which will help you along your way. And if you wanted to book the appointment in with me, just go to mortgagechain.co.uk and click book a free chat. All right, guys, you have a beautiful evening.